if I might. Let's go to forex.today. La, la, la. Beautiful looking trade plans, guys. Cool. Let's go with news and start with calendar for prepare for the week. Let's see. Should we do with medium? Yeah, we'll do with medium. All right, we'll just leave it as. Not a lot, or yeah, nothing really on the calendar today in New York. Don't have to worry about that. And then in Asia, we have the RBA meeting minutes. If you're a specialist in Aussie dollar or even Kiwi dollar, this will be something that you'll want to watch. Okay. Again, this is a look inside to the voting members of the Reserve Bank of Australia. So this should impact the value of the Australian dollar, right? So you should be there if you're interested in the Australian dollar. This is a nice opportunity to trade. Also, the one thing that the RBA is worried about is housing prices. They always have been. It's always been an issue for them. So all of a sudden, you know, at exactly the same time, guess what? Housing data comes out. Yeah, I mean, you should be there if you want to trade it. All right, so that's a good one. Looking on to Tuesday, British PPI. Yeah, we're starting to see inflation there, obviously, with the pound having weakened so much. Maybe we'll lose some of that as it's strengthened back. We'll take a look. PPI is important. And then CPI is even more important. So all of this is inflation. PPI and CPI, all of that is inflation. So if you trade the British pound, all of this is going to be really good tomorrow. Very good opportunity for trading. Okay, and you're going to pay more attention to the CPI because obviously it's consumer related, not producer related, and that's the kind of stuff we're interested in. Okay, and then that's pretty much it for Tuesday. Sometime around, you know, Asian lunch, I think it is. You get the Bank of Japan meeting minutes. Lots of opportunities to read, huh? Do I think they want to raise rates soon? Well, you know, that would be a very interesting topic to discuss. Maybe they want some inflation. Okay. So I don't know. Maybe you should go to the website, Bank of England, and do some research. That might be a good question. Okay. So, anyways, lots of meeting minutes to read if you're hanging out by the pool, getting sunburned, drinking pina coladas. Maybe you can spend some time on central bank websites too. Or you could read about the iterated deletion of strictly dominated strategies, game theory, or maybe a perfect subgame Nash equilibrium. Who does that? Who hangs out by the swimming pool, drinking pina coladas and reading about perfect subgame Nash equilibriums? Who does that? Losers, obviously. All right. So Wednesday, ECB info. Cool. Non-monetary policy stuff. Maybe that's not that big of a deal. Fine. Finally, a little bit of news out of the United States. Housing price index. I don't think it's going to be in rock the world, huh? So after the ECB stuff, just sort of all right, some sort of news out of the U.S. Great, and then Kiwi interest rate decision. So another Asian session for you to trade, huh? Okay, lots of Asian sessions to trade. Great. Thursday, a little more meat on the bone here. Retail sales. That's going to be better than expected because at some point, the pound is weaker than it used to be. So therefore, you're going to need more pounds to buy the things you used to buy. Therefore, sales will go up. Maybe not unit sales, but in currency measures, sure. Jobless claims, great. New home sales out of the U.S., great. And I get underwhelmed on these things. I mean, they're important but we know the trend is up. Therefore, what are you going to do now? Get that report and suddenly buy a stock? Well, where were you like 7 years ago, right? You should have been doing that kind of stuff. So we're on trend. It's good. It's positive for the U.S. economy. I don't expect the trend to change because therefore it wouldn't be a trend, right? So that should be good. I like it because it says, hey, you made more money this month doing absolutely nothing simply by owning your house. Like, I love making money doing absolutely nothing. I love that. But America, specifically, but probably most of the world, America is not about working hard, right? America's not even about working smart. America is about owning things, right? You own your house, you own some real estate, you own some stock, you own some bonds, you own some real assets that are appreciating. And it's about ownership. You can work all you want, you're going to be poor. You're going to be taxed like a poor person. And when you go to work really hard, I don't know. It's a very get rich working for somebody else. But the guy or gal that owns the company has a pretty decent shot at it, right? So that's just one example. Except that's new home sales, so maybe for the developers, but I think you get what I mean. My tax person said that to me many, many years ago. He said, Wayne, in the United States, there's two separate taxation systems. One for businesses and one for poor people. Because if you're rich, you own, right? You own LLCs, you own corporations, you own limited partnerships, you own, stocks, bonds, you own things, and that money makes you more money. You don't have to go to work if your money's working for you. Maybe that's the secret to everything in every economy, every part of the world. It's about owning and collecting rent on your money. All right, Kiwi, right? Kiwi yen. So you wanted to trade like Kiwi yen, Aussie yen on Thursday night / Friday, depending on where you are. Do you guys have a plan, by the way, for like how much money you need to stop working? I asked my buddy that the other day. We're smoking cigars. I'm like, hey, do you have a number? And he's like 8 million. Just like that, boom. Like no hesitation, 8 million. We're not there yet. As soon as we hit that, we're done. They've calculated it. They're working toward it. They're done. That's what they need. Boom. So you should probably have a number. You're planning ahead and you're saving, right? Only poor people spend money, right? You can't cream 100 million, right? No, rich people save money. They squirrel it away. And what happens is you put $1,000 in the stock market, 10 years later, it's $2,000. Someone else, a poor person, goes to like, I don't know, a discount store and says, this jacket used to be $3,000 and now I can buy it for only $1,000 and I can walk around and everybody will admire me because I have my $3,000 jacket on. Well, they spent 1,000. Like, dude, it's $1,000 for a jacket. What the heck's wrong with you? But I look like a millionaire. You're like, yeah, well, I have a piece of junk jacket. It keeps me warm. The rest of my money is making me more money. And so I think it was Jim Cramer in one of his books was talking about that, where you look at $1,000 and you shouldn't look at it as $1,000. It's like $4,000 because if you just put it in your account, your retirement account, let's say when you're 30 something, by the time you're 60 something, it's $4,000, right? It's 5,000. It's $6,000. Every dollar is $6. So what you want to do is just give that to yourself in the future. Forgo everything, right? Why would you buy $100,000 Mercedes if you only make $200,000 a year? You ever ask questions like that? You see this guy drive by and he makes $200,000 a year and he's driving $100,000 Mercedes. And you're like, what the hell's wrong with you, boy? You spent 50. It's like, there's something seriously wrong. So, anyways, yeah, to impress somebody else. Who cares? It makes you anyways. You don't need to. I don't like anybody, so why should I impress them? Right? Squirrel it away and save it, right? Save it, own something. Don't be rich, be wealthy. A rich person drives and he's like, look at me, I make $200,000 a year. Right? That's rich. That means income. Wealth is like, well, you might have a nice car. I don't have to wake up in the morning, go to work because my money is on me. So, anyways, I don't know how we're talking about that. All right. So, Friday, market PMI stuff. It's the PMI. When we hit the PMI period of every month, where there's like Italian PMI, Swiss PMI, Swedish PMI, Portuguese PMI, right? Polish PMI. I'm like, really? Just oh, Joe, there's always somebody that can fire you, right? This is why a lot of Chinese people from mainland China own like apartment buildings in Vancouver, Canada, or or Brazilians own property in Miami and that kind of thing because it's a way out if you ever need it. Or like in the Brazilians' case, they don't need the way out. What they need is a place to park all their money and not get crushed by inflation. Because now you could say, well, you own a $2 million beachfront condo, right? It's South Florida, and it goes up in value 10% a year. You make $200,000 a year, plus you got that beach place. So one day you could sell it if you need the cash, right? In Brazil, you lose 20. You lose due to inflation. You lose it. You're like, oh, you're behind the eight ball 17% a year just right off the bat. So if you suddenly have money, you got to get it out of the country. Get it out of here. Get it. Buy something in Miami or China. One day the government can just show up and say, yeah, we know you have $10 million, and yeah, that's ours now. Thank you. That's ours now. Thank you. So what you got to do is smuggle that out, buy some property in Vancouver. It's like that in Turkey now. Getting money in, getting money out. Yeah, 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 okay. Well, I just had to make sure. It's amazing, like all these countries, right, that have just awesome people and awesome cultures, and when you go there and you meet people on like a family level, you're like, these people are great, right? Wherever it is, Brazil or Turkey or whatever it is, right? You're like, this is everyone is awesome. This place is great, but it's screwed up. Why is it so screwed up? I don't get it. The people are awesome. The culture is great. This is like paradise. Why is it screwed up? And you, right? South Africa, it's beautiful. The people are awesome. What the heck's wrong with this place, right? It's frustrating though, isn't it? Like, well, if it has all the qualities of a successful, awesome place, then why is it so messed up? It's very frustrating. Huh? It's a beautiful world. I'm telling you, at the end, the most important thing about forex, honestly, to everybody here, the most beautiful thing about forex is this, you can be completely independent. You could be anywhere in the world as long as you have internet access, right? But I think of what would I do if I was a 20-year-old man and I was born and raised on a Caribbean island? What do you end up doing? Renting Vespas to tourists, going on fish fish for the day? Like, oh my God, that's it? You sell T-shirts to tourists, right? I mean, how depressing that must be. And then you say, you know what? You could be a currency trader. You could buy gold and oil out of the Asian market, just like a Goldman Sachs guy does, right? Like you're empowered with this opportunity to, with the most powerful people in the world and earn an income. And you need a laptop and internet, and obviously a brain and tenacity and discipline and hard work. But you can do it. You can reject, selling tourists those like margaritas in the giant plastic cups that are like 1 meter long. Like, right? Yeah, kicking ass trading school. So I don't know. That's what I like, guys. That this is something that you can own. It's like a whole economy in a box. You can carry it with you. And even though you were born and raised in some small town in South Africa, it doesn't matter. You're locked away in the mountains of Turkey, it doesn't matter. Do you have internet? Yes. Do you have a laptop? Yes. Good. Let's make some money, right? And realize that nobody else in the world is going to take care of you. And I don't care what government is overseeing you, they're going to try to take it away from you. So just to know that you have a whole economy in a box, it's in the shape of a laptop, and you can carry it with you. And you can make money, it's your career, it's your job, it's everything, right? I don't know, Andrew. I'm not an executive at Traders Way, so I don't know. All right. So, anyways, that's what I like, that you're just completely independent and you can survive. And that is huge when you're an entrepreneur. Just to have the opportunity is huge. Because I don't know what I would do if I was 20 years old, born and raised on some Caribbean island somewhere. You know, I don't know what I'd do. I'd probably be selling more T-shirts than anyone's ever sold to tourists before. But yeah, self-employed. Like honestly, it's funny. You go to these countries, there's no time. What day is it? I don't know. What time is it? I don't know. What's the weather going to be like? Well, it's going to rain 4 times and it'll be 80 degrees again. Like winter, summer, it doesn't matter. Nothing changes. Like you can live forever in places like this. But when you're hungry, that sucks. Yeah. Good news and bad news. Good news, you're going to live forever. Bad news, there's no food. Oh, this is going to be a long wait. Yeah. So, anyways, you can take this. You can control your knee. It's awesome. All right, CPI out of Canada. That should be ticking up since the Canadian dollar's lost so much. So inflation out of there should be pretty good. Oh, I skipped durable goods. You know, the thing with durable goods is it's just so volatile. So I would recommend being around when that comes out, and if it moves the market, trade it. But I wouldn't necessarily predict a direction, nor would the outcome mean anything on the long run. So if it comes out poor, it doesn't mean the Fed's going to not raise interest rates. It doesn't mean the economy's come to a crashing halt. It just means the numbers are just like shotgun, right? Just boom. Some are really high, some are really low. Not much hits the middle. The average is, dynamic, let's say, whatever. And then we end the week at US PMI. So really a snoozer for New York, but sometimes that's the best thing you want because there's nothing in the way of the trend. So whatever wants to happen, like let's say the dollar recovers, we could have it all week. Or if it's going to continue weakening, it continues weakening. Cool. I like that. Right? It's not like it's strong for 3 days and a weak for 2 days and that kind of thing, right? So anyways, guys, yeah, unless you're an exotic dancer, not many careers are portable, right? A career in a box, an economy in a box. I think it's cool stuff. I don't want to look at COT data just because it's not going to incorporate the Fed stuff. So yes, there is lots of job owning and stuff, but they're trying to get you ready for June. Okay. Okay. Alrighty. 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 So I had a smoked old fashioned. Anybody like fancy cocktails? Ordered this. So an old fashioned, you probably know what it is. So I'm like, a smoked old fashioned. What is that? So I ordered the waitress, and she's like, "Oh yeah." So I don't know. 15 minutes later, she comes out with this bell-shaped glass terrarium with a wooden bottom. This, and it's probably a foot tall, big glass atrium, like bell-shaped, and it's gray, swirling with smoke. She brings it over. You can see it's heavy, right? And you can't see a drink inside. You just see gray smoke swirling around, right? And she's like, smoked old fashioned. And then she pulls it and kind of twirls the glass bell, and smoke just goes everywhere. And inside, of course, is my old fashioned. I'm like, oh, nice. I'm a currency trader. It's a tough gig. But it was a pretty cool presentation. It was pretty cool. So that was my smoked old fashioned. All right, so here we go. Hot to go, HOTTOGO. What should we do first? Kitty CAD? All right, let's do USD Kitty CAD. What do you think of this? Another random walk, isn't it? What a coincidence that this thing flipped and changed directions on a cluster of weekly and monthly pivot points. This one bounced within a pip. This one bounced within a pip. What a coincidence. That is just amazing. So remember, oh, I added the 2155. How funny. We had this for a while without the moving averages. So the black line is just simply the price. One of the things we were talking about is, when you kick off your support and resistance lines, maybe you take the 2155 cross. Like, I'm looking at all these crosses here. They're not really at good places to buy, right? So you ignore them. They're only important if they're kicking off places you'd want to buy. What an amazing coincidence, huh? So if that holds, what's the target for the week? Weekly M4 is correct. I highly doubt we're going to do it. I mean, I'm a bull on the dollar long term. Okay, I get that. But I'm not ready to believe it, right? So let me draw this out. If you were a bear now, where would you sell? Well, I know it'd sell at weekly M3, monthly R1, and I know here, because that's also weekly R1, monthly M4. And I know I would sell here as well, monthly R2, weekly M4. So should I be buying it all the way up? It's a tough question because I don't mind buying this. It's going to be a fight, isn't it? So where do the bulls buy? Well, the bull is supposed to buy here, right? We know that, and it's already happened. Let's say it comes all the way up. Then it's going to drop, and then a bull would buy it here. Then it's going to come up here and drop, right? And then it's going to head up like this. And that's why price action works that way. That's exactly why trading works that way, right? A bull would buy this, a bear would sell this, a bear would sell this, a bull would this, and a bear, right? They work together. Right? It's the best response. So when you're developing like game strategies, as you know, I'm studying game theory, and you would look at the best optimal response along the way. Now, do we know if the bulls are going to take it north that far? No, we don't. But if they did, what would your response be? Right? And if it came up here, what would your response be? And here, so on and so forth. Right? But there's going to be a different scenario if this occurs, right? So it's very helpful to know what your strategy is in these situations. Yes. What is the strategy? 2155 cross, for example. Apparently, you don't own the book. Um, I think there's stuff out there, isn't there, on the website? I don't even know anymore. But yes, 2155 cross is the speed in the direction of the market. 58 cross Has to do with price action. So the 5/8 would be the trigger off of support or resistance at a bare minimum. But I don't have a 5/8 on this one. All right. So for example, if you wanted to buy pound yen and you were interested at this price, which is 140.00, well, not quite. Okay, 139.59. So it's one, yeah, midpoint cycle level. Anyways, so what you would do is you drop into a 5-minute like this, or even a 1-minute like this, and the 5/8 cross up would be your trigger. Oh, a Kindle version of the book. Sweet. Cool, Ian. You know, Wiley Publishing will be very happy. I may not go out and spend the 37 cents that I made from your purchase. I might just save that. Seems fair, right, Ian? You're like, wait, I paid like $50 for the book. Yeah, I made 37 cents. All right, cool. So that's up to $3 or $4 now. Sweet. Cool. All right. Here we are watching the bounce. So at some point, if you're mechanical, you wait for the cross. You can wait for the cross and then the next pullback. Some people buy it right off the pivot. By the way, do you think it's a coincidence that we wicked bullish engulf at 139.59? It's an amazing coincidence, huh? Ian almost buy a cigar. I don't buy $3 cigars. I didn't just buy a box of Montes, and I think they're going to show up today. Afrique. So, anyways, you need to make a decision. Isn't this great, though? So, like, let's look at this. As a bear, this is a primary sell zone. Is that funny? We're looking at this now, which for some bulls, I wouldn't call it primary, but it's a. Change the time frame here. Let's go to hourly. Okay. An amazing coincidence, huh? So where do you want to buy this? Where do you want to sell it? Well, if you lack a trend, I get very unexcited pretty quickly. Oh, Chris is reading the book. Right on. Right on, guys. Well, I appreciate that. I mean, at the end of the day, I wrote it so that I leave my point of view. I think I've matured in the 10 years since I wrote it, but the lessons are still there. Does anyone write books like that brutally honest? Like, I believe in the book, I'm like, I tell you that when I first started trading, I sucked. I absolutely, totally sucked, and I had no gut feeling whatsoever. And everything I touched turned to lead. Like, I couldn't be more wrong on everything. I would wait 19 candles in a row, all green, and then I'd sell, and the stupid thing would instantly turn red. It's just, I could do anything right. But I worked really, really hard, and that, over a course of time, I just sucked less and less. I went from like embarrassing to horrific to disgraceful to just bad. From bad to like pretty bad. And then from pretty bad to, not good. And then from not good, I just went to kind of just so, right? Some big wins, some big losses. Then I just kind of got to sort of break even. But then you stay there forever. You can't make any money. And so then you push the envelope a little bit to make money, and then boom, you start losing money. And you're like, damn, stop pushing the envelope. So you then you pull it all back, stop trading altogether. You're like, well, at least I'm not losing money. You know, right? Like, I don't know if any other books are that brutally honest. I I assume many people like to tell you how awesome they were. But anyway, so this is moving sideways, and I'm very unexcited. Yes, you could sell the weekly. I'm three, all that kind of stuff. But remember, I'm trying to get myself into trends. I'm a trend trader by definition. I believe, at least, right? I believe in my heart. I'm a trend trader. So when I lack these trends, you become a range trader, and I understand you can scalp off these levels, but I'm not always scalping. Chris says, same here, can't get anything right at the moment. Then that's the perfect book for you. So now you have a choice. By the time you finish it, I give you like very, very concrete advice on what to do based on the things that I did. So you could just read it and then trash it, trash the book. Just like, oh, that was really good. Delete because it's on your Kindle. Or you could actually say, you know what? I'm going to roll up my sleeves and I'm going to do these things. Let me tell you, that idea is the easiest part. And then you're going to have to do it. And that is ridiculously complicated, or not complicated, ridiculously difficult for many people, right? Because now you're going to have to do the work. And people don't want to do the work, they just want to get rich quick. Well, good luck with that, bro. All right. So anyway, so I get scared in markets that are rangy because it's not really what I'm looking for. Aussie dollar, did I get my pullback? No, I didn't get my pullback, or not much of my pullback, huh? Monthly Central seemed to have really held. How interesting is that? You notice Fibonacci retracement and stuff. Aussie though is funny because it does do like oops like this here. You can see I'm predicting like 100% retracement of this. But the thing is, Aussie does stuff like that a lot, where it goes up 300 pips and then over the course of 5 days drops 300 pips. So that can happen. But look what actually did happen. It came up, it came down, looks like a 50% Fibonacci retracement, but just kicked off the monthly central. Went up to the monthly R, and look at that, not even 1 pip above, and stopped. So let me ask you something, because it does beg the question. Do professional institutional traders that have the capability of moving markets, when working together, of course, do they use monthly pivot points? So if you don't use monthly pivot points on this Aussie dollar, you're just flying blind. You don't know what's going on. You don't know what the other traders are going to do, right? And maybe it is a coincidence. As you can see, it's pretty straightforward role reversal kind of stuff. Okay. I have it marked down here, and you can see it's a little crooked, but let's do it. That's closer. So it's not quite right, but it is a role reversal, up, down. I somewhat predicted it here, but the instead of a 618 or whatever, it only did a 50%. So that's what it did. And it's supposed to go up here. as I already indicated. Okay. So, that one's not great. This go bearish, don't you think? Okay. Because if it was going to go bearish, there's only one place left. You see it? There's only one place left for this to go to bear. It's like right where we are. Now to go back and again program your brain, you have to do this a lot because we're talking about electrical chemical energy and synapses, and it's your brain works in the way that the synapses connect together. So you have to like physically break these connections, and then join them together in a different pattern to think different. It's actually rewiring, right? Pulling wires out of here and plugging it over there. Sort of like the old phone switches of the 1950s, or actually even older than that, right? The 1920s. When you pick up the phone and the phone operator would be on the other side. How can I connect your call? Right? You have to actually reprogram your brain here. So one thing to do is go back and look at the price action. We started near the monthly M3. Therefore, our target's going to be a monthly M1. There was a drop, Fibonacci retracement roll reversal, and then a second drop into the monthly target very early, right? Let's say the first week of the 4-week month, we hit our target already. So we had the price action, the lower low, and then we hit the target. And then the rule is if you hit your target early, very often it goes back to the central pivot point. Sometimes farther, sometimes it hits the central and stops or drops, right? You don't actually know. I've never sort of recognized a consistent pattern in that case. The consistent pattern that I've noticed is if you hit your target early, it goes back. Okay. So in this case, we had price action. So now you have to program in your brain price action, importance, right? How many idiots do you think saw this huge red candle and then sold? Okay. Now, first of all, they're idiots, right? So they sold way late. And then what? They probably jammed their stop close because they're scared. Then this retraces back. I'm going to guess it's like 100 pips, wiping out all the idiots for losses. And then what? Boom. Then the pros get back on and just bring it back down again. And then once again, the idiots sell, right? Okay, so there's that part you have to realize. If you see a bearish engulfing candle, wait for the pullback. Where? I don't know. Look for a fib, look for a pivot, look for a psych level, look for a roll reversal. Somewhere in a confluence would be great. Okay. Some people would say 76000 was important. Whatever. So, and then it dropped. Then it hit the target early in the month, and it did retrace. Now, there's lots of other things going on in here. Yes, Fed meetings and stuff. Yeah. I get that. That's why this move beyond might look good, but I don't think it's actually predictable. The predictable part is everyone's going to take profit here, and it could potentially go back and reset off the central. That's the part I believe is predictable. The rest is just that is chance, that is logic, because the Fed maybe said something else, or maybe whatever the Fed said could have been interpreted differently, and it could have easily just come back down, and you'd say, "See, look, the monthly central." So, look, all I know is we'll probably, not always, but probably go back and touch the monthly central. Same thing early in the week. We will probably go back to the central. That's all I know. After that, I don't know. But you should at least look at this and move some synapses around so that you understand this, or you can recall, which is most importantly, you can recall that these things can happen, that price action, good. Pivot points, good. Counter trend trade, good. Right? And then on your left foot with your right foot, stamp on them. Boom! Now you're going to get an emotional reaction. This is actually a really good thing if you're trying to reprogram your brain. An association, it's called an anchor. So if this drops to that monthly M1 early, step on your foot, boom! And you'll say, back to the central pivot, back to the central pivot, back. But most people are not that crazy. Ryan's that crazy, but most people are not like Ryan. All right. Cool, right? Little neuro-linguistic programming in the morning. How cool, huh? Maybe we'll see some other examples. So, Kiwi, you got to be ready for it, don't you think? What an amazing coincidence that the weekly M2 is the bottom. It's amazing, all these coincidences, huh? It's like ridiculous. Somebody might double bottom this. There's so much yellow going on here. It's kind of funny, actually. Maybe we should try to delete some of this yellow. Okay. I have this as a big, whatever. Let's try to get rid of it. There's just too much. All of this looks supportive, doesn't it? Look at this. Look at the weekly. Doesn't it just want to go up and up and up all summer? I guess I'll leave it there. So let's go to a smaller time frame. What if that double bottoms, right? And then what? Let me use a drawing tool instead. Let's clear that. Okay, what if it does this? What are you going to do? Goes back to the 200. What are you going to do? Now, you probably already know that that price is important. If you look left, which you can't see on my charts, if you look left, you'll know it's important. The hammock is great, yeah. Down, up. Where's it going to hit? Where's it going to get challenged again if this now goes? It's going to go up here, and then it'll be challenged. Okay. Then it's going to go up, and you got your week. And then what's going to happen next week? Right? I think, is it next week? Let me open up my little calendar. Next Friday, not this Friday, not the 24th, but the 31st. So this is a long month, huh? I actually want to stop trading this month. I've surpassed my goals for the month, and that makes me scared. Yeah, some R50 and stuff. Ooh. So anyways, March 31st, this pair is supposed to fall because there's a $2.37 billion order waiting to execute, not this Friday, the following Friday, the 31st. Isn't it nice to know that? But don't tell anybody. Don't tell anybody. But you could front run that order. Isn't that nice? You could front run that order. I wouldn't do it now, but maybe Thursday. And I think it's going to be a good one because the last day is on a Friday. I think it's gonna move, man. So not tomorrow or the next day 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 or the next day. But the day after that, sell this bear. Isn't it awesome having forethought, having a plan and a strategy? I'm not going to sell it today. I'm not going to sell it tomorrow or the next day 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 or the next day. The day after that, chow, so. Hey, I love being smart money. Don't you? Don't you love being smart money? Wow. Alice of forethought. So anyway, so I would hope more up than down for those, right? More up than down until then, and then a little bit more down than up. So we'll see. So look at, are you starting to see that there are some interesting pivots going on? Yeah, I think so. Anyways, let's see. I have gold going up, which is strange because I'm not a gold bug. I'm a gold bear. I have it going up to, was it 4.56? Is that right? What did we actually hit? It seems to be the high, right? Did we hit it? We hit it, didn't we? My target was 4.56. How many people would agree with that? Actually way down here, the 10th of March, we had a goal of, and I'll book it here, 4.56. How many people can validate that? Okay, let's plot that. Look at that. Let's look at the orange vertical line on a 5-minute chart. And then flies. Oh, what? 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 That's 10 days worth of price action that hit my line and then stopped. How interesting is that, isn't it? So remember, I'm not trying to sell you some sort of like Wayne genius idea, right? I don't care if you think I'm smart or not, right? So what is it that I'm trying to quote unquote sell you? What's the raison d'etre? What's the pitch? The pitch is that it is predictable. It is understandable. If I can pull these numbers out 10 days in advance, that there is a pattern going on and you can learn it, right? If it's teachable, it's learnable. If it's learnable, it's predictable. If it's predictable, you can do it, right? I think a big part of what I'm trying to show you is that it's worth fighting for, right? Do you see that? Like, do you at least walk away every day going, all right, I'm not that good of a trader. And I maybe some of the things that he says I don't really get, but I know it. I know I know the potential's there. Like at least you walk away with that. You know that this is something that can be conquered. And you could probably do it if you just work hard enough, right? Because isn't the belief incredible part? Because look, if it can't be done, like why waste your time, right? You're like, oh man, manipulated by central banks, and this is a game for big bankers and stuff, and you never know when J.P. Morgan's just gonna drop $1 billion on the pound because some big rich client or some deal that's going through, and you're just like you just get whipsawed to death, and that's it. So you might as well just walk. But it can be done, right? How many people have seen over the days, weeks, months, years, and even more than a decade have been doing this? How many people have seen that it can be done? Therefore, you might actually be able to do it, but you know it can be done, and I think that's hugely important because there were times in my early trading career where I thought, you know what, maybe this can't be done. Okay, yeah, then it's worth fighting for, right? I mean, that kind of stuff is just stupid, right? Like within like $1, 10 days ago, we said it was going to go up there and stop, and it did. You're like, that's sick. That's sick. Now, the actual target last week, if you remember, should have been M4, but I stopped just short of it. Okay, I stopped just short of it because I'm like, well, squeeze in the let's squeeze in the bit and stuff like that. Like, let's just play it more conservative than we probably normally would. But I'd be a fool to ignore the monthly central, right? So I got to squeeze that in there. It's relevant information. An amateur might say, well, Wayne said, M2, M4. Well, yeah, okay, I did. But I have other pieces of information here, right? In this case, the monthlies. So, like, ignore the monthly? Well, no, you don't ignore it. You have to incorporate it. So I'm like, well, okay, so I don't know. Let's incorporate that. So look, I have the M2, the monthly central. And then I look at it and like, yeah, just for fun, let's call it 123.56. 1234.56. Just because it's easy to remember, right? Cool. If you're a bull, you got to be careful. In this time frame, it's saying double top. Uh-oh. So what if you were, then this says what? In the next 12 hours, look for a short up here around the monthly central, right? Because look at this doesn't say short, does it? This says long. The moving average short, does it? No, it says long. But it says long double top drop because it's going to reset off 100, right? Look, we killed the 21, gee whiz, Thursday of last week. So here's what this is saying to me on this time frame. Now you might want to look at frames, but this is what it says to me. Up to resistance. Okay. Get there, this will be overbought. Now, how do you make that overbought? Going up to try to draw it a little bit, it'd be like sideways. Okay. I don't think it'll actually go side. The first part of pulling it to the overbought is by not making higher highs, but at the same time, not really making lower lows. Okay. And then you start to make lower lows again. So I kind of have to like that, I guess. So then that'll pull it back into the zone. And then what? Down to the future 200 EMA, but I'm still just going to drag it down to that. Okay. And therefore, it's now making lower lows, lower highs. So therefore, it would be falling. Okay. And then what is it going to do? It's going to bounce there. It's going to start moving up. Therefore, it's going to make it oversold, head up into here, and then stop, which means by then this will have been pulled over bought, and then this will start making lower lows instead of lower highs into the sell zone, and then we drop down to the next level, and that pulls it in smooth there. You got to know your tools, guys. If you don't know what oscillators are telling you, then you need to study them. So honestly, like for example, I probably studied the stochastics for a year. Right? It's not bragging to say I'm really good at my oscillators. It's not bragging. I spent a year studying it. It's just a fact. You want to get really good too? Spend a year. Do the okay. That's it. If you studied it for a year, you'd be good too. It's just factual. It's not arrogance. If you spent 2 years doing oscillators, you might be better. Not necessarily, but probably you'd be better than me. Good. I wouldn't think you were arrogant. I think you were disciplined, hardworking. I'd respect you. I'd probably ask some questions too. I'm like, well, this is what I see. This, and this. Have you seen anything else? And you're like, yeah, well, on year 2, I noticed something very interesting. I'm like, yes. Okay. When do you consider this chart a trend to short? Those are two different. Okay. Those are two different questions. So what is a trend? A trend is down, up, down, up, down. What's going to happen next? Lower high, lower low. That's a trend. And then you said too short. Well, even if this is an uptrend, or sorry, even if this is a downtrend, oops, if you're a bull, if this is obvious support, you could still buy here. If you're a bull and this is obvious support, you could still buy here. If you're a bull and this is obvious support, you could still buy here, so on and so forth. So for example, if you're a bear, this doesn't look like a downtrend, but the pattern is sell the double top off resistance. Is this obvious resistance, people? I was trying to get my. Did you lose the camera and everything? I think you did, didn't you? This thing's having problems. Let me pop it up. Okay. All right, let's do it this way. Okay. First part of being a bear, you need resistance a blind man can see. Okay. Right? If you don't have the resistance, forget about it. I don't care anybody else. The conversation's over. So resistance a blind man can see, or maybe to be, politically correct, um, resistance a blind man can see, or a mentally challenged woman could understand. Okay. And then if you have that, then you look for a reversal pattern. Okay. So give me an example of a reversal pattern. Well, the most basic one is, I count this up, and you short right there. As soon as it turns red, boom. Okay, because at that point, this would come overbought, oversold. Okay, and you know that's going to happen, or you assume it's going to happen based on the 55 being in control. That 55 has been in control for days. It needs to give up the goods. Okay. The second opportunity is catch it on the way down to the 200. And that's where you would sell. And then I'm thinking somewhere around here, we settle. Now, I'd actually like it to come down here, but that's a whole different kit and caboodle because I'm looking left here. Okay. So, opportunity with charts. Thank you, Harvard. Opportunity number one, sell the double top. Number two, sell the 1, 2, 3. Number three, you're fired. First place, brand new Cadillac. Second place, a set knives. Third place, you're fired. Sell the 5A cars? Yeah, sure. If that's what does it for you, the 99.9% of the values that you've made the decision now. 5A cross, how about the 2-3 cross? What about the 2-8 cross? What about the uh, uh, 5-9 cross? The 4-13? I don't care, dude. You either sell the double top or you sell the retracement after the break of the neckline. I don't care what your moving averages are. It's right. Don't think mechanically, right? So it's like if it dropped or whatever. I don't know. Whatever. Right. Whatever makes you think it's done something reasonable. If you're already a bear, then you're ahead of the curve. You either sell there or you sell here. Okay, that's it. How you measure that, I don't care. That's up that's up to you to decide. That's it. Just I prefer you sell somewhere in the rejection or here at the test of the rejection, right? This being resistance, not now, in the future, and this being resistance. And then you want to see test resistance, red candle sell. I mean, no moving averages. Any moving average you want, just make the decision. What time frame, Wayne? How about the 1 minute, the 2 minute, the 3 minute, the 4 minute, the 5 minute, the 6 minute, 7 minute, 8 minute, 9 minute, 10 minute, 11, 12? What? Just do it. Whatever makes right. Because at the end of the day, it's irrelevant. You're either closer, right? You either make more pips or less pips. You either lose more pips or you lose less pips. Ideally, you're as close to the resistance as possible. So this one, you put a stop here, okay? And then if it falls, and then this retraces and sells, where do you put your stop? Probably same spot. The first one is aggressive because you're selling here, but your stop's close. This one is more conservative because you're selling here, but your stop's farther. But it's more likely to succeed. You could do both. You could do neither. The thing is, your value market is that you've made the decision already. So, for example, if you're a bull and you didn't buy it at the M3, then what were you doing? Right? If you were a bull, or if you are a bull, and you didn't buy it here, then there's just, you're deranged. You just don't get it. You need to work on that, right? Because that's a role reversal every day of the week. Off of the M3, that's exactly what you're looking for. Okay? And correct me if I'm wrong, swing traders. Didn't we talk about this where if you if you wanted it to go up, you can't buy it here, but it could go up and come down, and then you could buy it there in the future? It had to do with measuring risk because you can't buy it resistance. We know that. And this is resistance, so you can't buy it. But it is the M3, but you're supposed to buy M3s when it's dipping down, not going up, right? So it's sort of like you could be a bull, that's fine, but you need to know when to walk away. Those are not, that's not the market condition that you want to buy at. But if you get lucky, it'll rise up, come back, and buy it with different conditions, right? Okay. So that's the opportunity. Okay. I think there are still risks in those markets, but well, look at the time. I've babbled on too much today. So I apologize for that. Will you guys be here tomorrow? Cool. Has everyone opened an account at tradersway.com? I mean, there'd be something pretty seriously wrong with you if you hadn't, right? Like it'd be really embarrassing, say, to tell your mother that you're logging in every day and you're learning so much, but you're ripping these guys off because you're not even you're not even contributing back to the group. You're like, it's great. I go to these webinars, I learned so much, but I didn't open a demo account. And then all these people post their trade plans on forex.today and share their ideas, but I don't even contribute, Mom. It's great. I just rip all these guys off. It's awesome. Other people spend hours a day, and I just suck blood dry. It's awesome, Mom. You'd love me for this. This is exactly, Mommy, that you wanted me to be, right? I'm a freeloader, Mom. Boom! High five, Mom. I love you so much. Thank you for. I couldn't have done it without you, Mom. Right? Come on. So I think you need to post trade plans on forex.today. That's why it's there, right? This is a community, people. So if you're embarrassed to tell you're a freeloader, ooh, then maybe you should spend even a half an hour a day posting one trade plan. And if you just don't feel comfortable, like you're just not ready for that, you just don't understand the technicals enough, then you should at least read other people's posts that they make and then leave a thoughtful comment. Would you agree that that is reasonable? You either post a trade plan or you leave feedback on a trade plan. Is that too difficult? Like you want to be a huge success in Forex, but that's too difficult. That's just too much to ask. Really? Wow. Well, it's a zero-sum game, right? I had I had 77% last week. If that's too much work for you, and you're going up against me in a zero-sum game, I have no problem with that. Because I'm going to be more patient, I'm going to be more disciplined, I'm going to be more experienced. Because remember when I talk about keeping a trade journal the first few years of your trading, what it does is amplify and magnify your years of experience. So by the time I was done trading 3 years, I had like 9 years of trading experience. Like, you just can't win against somebody like that. But I want you to be like that, right? Right? Open up a demo account, practice very specific things, work really hard at very specific tasks. And then every day challenge yourself to look at the market independently. What you'd want to do. Why would you buy the Aussie yen today? Why would you sell the Aussie yen today? What are the levels? What patterns are you looking for? How would you put this together in multiple time frames and put it up there on the website, knowing that 3 or 4 or 5 or 6 or 7 or 8 people might leave comments? And if you're not posting, then you're the one leaving comments. Like, I just don't understand somebody that wouldn't put that level of effort and commitment into their own success and into a community that supports them, right? So, yeah, I will post this video on the website, right? I've given you 2 hours of my life today, right? How much are you willing to commit? Peace on earth, right? I talk straight with you because I want you to win, but you're going to have to fight for it. I'm sorry, there's no more welfare. No welfare, man. It's gone. I'll tell you a true story. I'm sitting there early in the morning watching pelicans just off the coast, the beach, splashing down, catching fish, splashing down, catching. And I notice they do this all day. They're just, and I think, when is it that the pelicans are going to get together and create an organization that helps the penguins that don't fish all day? Because it's not fair to the lazy penguins, or not penguins, sorry, pelicans, that didn't catch as many fish as the hardworking ones. And they're like, that's just not cool, bro. You're catching all my fish because you're working all. Why don't you relax, man? And because you don't relax, you're eating my fish that I should have, even though I'm not fishing. So maybe the pelicans should get together and start an organization where, out of the hardworking pelicans, maybe 30% of that fish should go to the ones that are not fishing, because it's just not cool for them. And maybe they should bail out the non-fishing pelicans that spend their day floating around and just cruising the waves and doing all that kind of stuff, right? Like, and I'm laughing because, you know what? Pelicans wouldn't do such a stupid thing, right? There's no welfare for pelicans. I swear you. I was thinking about this. I'm like, and I walk and tell my wife, I'm like, honey, you know what? I feel really bad for the lazy pelicans. It's really upsetting me because they're floating around, and sometimes they flap their wings and they glide along the water. But there's like 5 or 6 pelicans out there just all day catching fish. Well, I don't know what these other pelicans do. It's like, but they must get angry and upset that the other ones are catching. Anyway, she's like, shut up. I'm like, no, I could write a whole thesis about this at Harvard. This would be great. Right? There's a whole thing out there. I know it. I can see it. There's like a book, a paper, a thesis, a lecture tour. Right? She's like, shut up. All right. So there you go. There's no welfare here, guys. You need to work harder. That's it. I'm sorry. So peace on earth. May the pips be with you. May our profits be above average. And honestly, there should be 78 trade plans on forex.today tomorrow. Or if there's less than that, let's say there's only 38, there should be lots of comments on the 38 that are posted. If not, that's just a decision. I can't do anything about that. So honestly, after talking straight with you, peace on earth. May the pips be with you. May your profits be above average. And actually, I don't care about the lazy pelicans. I think a hawk should come around and maybe a killer whale just come up from underneath. Great white thing, right? Food for the great whites. Great. Cheers.